Hey guys, what is going on? Welcome to our day 2 of our intro to Stocks Bootcamp. So glad that everyone is able to join us today. Really appreciate those of you who are watching with us live. We've got about 25 of us on live. Really appreciate you guys hopping on. So let's get going and let's dive in, and then we'll get to announcements and all that good stuff later. So let's do a little recap of yesterday. So yesterday we talked about a lot of things pertaining to stocks. I know it was probably a lot of information, but hopefully you got something out of that information. But basically we talked about what is a stock. We went over the different markets in terms of where you can buy them. And also just making you aware of some of those. We also went into a little bit of detail about how stocks can actually be beneficial to your overall investment portfolio. We're actually going to dig in deeper to that in a couple minutes. We also talked about the different types of stocks, and then where you can get invested, how to start investing in those, where do I even do that? We went and talked about the reasons why you would choose one over the other. And then we also went over briefly what are some good stocks to get into in terms of, just different sectors that I believe are good to get into. And so there we go. Right. So that's what we talked about yesterday. If you want more information about that, or you missed yesterday, feel free to go back on our Facebook page and you can view all of our previous calls on there. And it's really good. It's a lot of content. I'm just going to warn you now, it's a lot of information, so I hope that you guys will be able to take that and do something with it. So without further ado, let's get into today's topic, or topics, plural. And the first one is going to be, what is a stock portfolio? So that's one of the things that I'm asked so often. For those of you who are new to investing, what exactly even is a stock portfolio? Is that different than my regular portfolio that I have? Do I need to do something special? What is it? So in an essence, right, the word portfolio is just a fancy word for saying a collective investment. Okay, so you can have different types of portfolios. You can have a Forex portfolio, you can have a crypto portfolio, you can even have a stock portfolio. But today I want to, overall, we've been talking about your investment portfolio as a whole, and then using stocks to do what you want with that. But today, specifically, I want to talk about our stock portfolio. I really want to get into that. So it is important to know where your money is going to, what portfolio you are investing in. If you don't have those marked out, I would highly suggest you do that, just to avoid confusion, because you need to know how much money you have in investments, and then also where is it going. Okay, all of that plays into your overall net worth as a human. So you need to make sure, and especially if you want to start buying life insurance and things of that nature, you definitely want to make sure that you know how much you're worth, and part of that is your investments, right? So let's just put this into perspective, right? So as a parent, you can begin putting together a portfolio for your child. Okay. And there are certain ways that you have to go about it. Okay. So if you want to know more information about that, please feel free to let me know and I can get that information to you. But as a parent, you can begin already, you can start to build your child's net worth before they even work a job. Okay. And for me personally, trying to better the next generation, that's my goal, is that my kids are better off than I am. So obviously, as a parent, I would definitely want to start trying to build up that portfolio. And, even my portfolio, I would want to do that. So when you do this, right, the longer you have a portfolio, so the longer you have something like this, the more it's naturally going to be worth. Okay, someone who has a portfolio for 60 years is obviously going to be worth more than someone who's had it for, let's just say, 20 years. Now, you're probably saying, well, what if I have more money to invest in it? And that is sometimes the case. But for most of us, the sooner you do it, the better off you'll be. And this is why I emphasize getting your kids started. And it's not even that hard. It doesn't take that much money, and you can do that, right? So within that stock portfolio, that we're talking about here, I would focus on a couple different sections within it. Okay. And feel free to write these down, and make sure, if you want to know more about this, or you want to get really more in depth about this, feel free to message me or message our Facebook page, and we can get some information out. Or better yet, you can go online to learningcurveltp.com, make an account. It is completely free. Join us, and then even join our Facebook group, and you can ask more in-depth questions there. But let me kind of give you some of these sections that I believe are important within a stock portfolio that you need to be focusing on, right? So the first one is free cash. That's just basically cash that you have in the account ready to be invested. It's not yet invested, but it's just there, okay? The next one is stocks, okay? We talked about stocks yesterday. Definitely you want to have a good chunk set for stocks. The next one are mutual funds, okay? We're not going to cover this today. We have plenty of information on that on our website, but mutual funds, an excellent way to get good growth in your portfolio. And I truly believe that mutual funds are definitely something that everyone should be involved with. And then lastly, ETFs. Okay. I personally believe that ETFs will one day overtake mutual funds. They're already starting to get to that point. People are less and less investing in mutual funds and more into ETFs. So I think that for us as a generation, we kind of need to start preparing for that. So feel free to look into some ETFs and really, really start hammering that down early, because those definitely, the longer you have it, the better off you will be, right? And again, within all of that, so now we've broken that portfolio down into sections. Well, if you go to certain brokerages, they will actually help you invest your money wisely. And typically the three different strategies that these brokers have are growth, stable, and aggressive. Okay. And you can kind of do the same thing. If you don't want to use someone else, you can do this by yourself. For me personally, I like a growth portfolio. Everything that I do, and we'll talk about this later on, everything for me is long-term, big growth. I want to see it happen later on. Okay. I'm waiting to have my big payout till later. Okay. I don't necessarily need it right now, but if I wanted to, I could have it. Now, obviously, the younger you are getting started into this, the more aggressive you can be. I would recommend, if you are, in your 20s, definitely go for an aggressive type strategy that they're all over the internet. Or if you're using someone, feel free to do that and ask them more about that. But I would say be as aggressive as you can be, because you have more time. If something bad's to happen, you can take more of a risk. Okay. So why not take that risk? That's just me personally, what I would do, but everybody is different. So if nobody has any questions, that is great. We will move on to the next section. If you guys do have any questions, though, feel free to leave a comment. We'll answer those as we are going through this call. So our next one is going to be, what percentage should I be investing? So when I mean percentage, meaning how much of my check am I supposed to be putting into investing? And this is kind of a this is a hotly debated topic, but I'm going to try and make this really, really, really easy for you. Okay. So, I'm not a financial advisor, so I cannot personally tell you what to do with your money exactly, but I can tell you what I do. So with me, I take 10 to 15%, give or take, depending on what time of the year it is. I take 10 to 15% of my check and I put it into investments. Okay, this could be stocks, forex, whatever, CDs, whatever you want. To classify as an investment for you, that's what I do. I take 10% of that and do it. Now, recently, I've been putting more into my stock portfolio because I'm seeing more of an area of growth that I typically wouldn't see. So, for me personally, I like putting more money into something, again, that's going to grow. So, I'm seeing that there's growth in this area, so I'm going to invest a little bit more. Invest a little more into it. Okay. Now, when you take that 10%, we just talked about diversifying your account a little bit in the sections. You do want to make sure that you are diversifying. Diversification is a big key. That's why a lot of people who have a lot of money are in a lot of different areas. You want to have your hands in as many bowls as you can when it comes to investing in stocks, okay? But here's a rule of thumb that I typically follow. I don't ever want to be 30% or more invested into one specific sector, okay? So, for instance, if I have 4 sectors and I'm in, 25% in one, 25% in the other, and 50% in another, but 0% in my other sector, I want to make sure that I am no more than 30%. And this helps me be able to put my hands in different bowls, but also it makes sure that if one sector does go down, like we talked about yesterday with the disappearance of Blockbuster, if something like that were to happen, I'm not going to lose a huge chunk of my portfolio, okay? So you want to make sure that one section helps another when they're not doing so well. Okay, this is why I say you want to make sure you have many different hands and bowls, okay? Please, please, please make sure that you do that. And again, this is an individualistic thing. So if you want to be more invested into that, feel free to do that. Again, I'm not a financial advisor, so I cannot tell you exactly what to do with your money. I can tell you what I do, and you can take my advice from that. But that's it, okay? Now, a lot of people, and I've seen this recently, and I want to mention this now. I've seen a lot of people recently who are on Facebook groups, who are just in different forums. They see these stocks and people are really into them. They're really hyping them up, okay? This is the wrong kind of mindset to get into, okay? Because people are not selling you on the fact that this is a reliable stock. Again, yesterday we talked about looking at stocks and the characteristics of a good stock. Most of the time when people are telling you to buy something, there's a hidden agenda behind it. You want to make sure that you are doing your research. Please do not follow the hype, okay? You do not need to buy into that. It is a lie and you need to flee from it, okay? Please do not just listen to somebody on the internet and go, okay, I think that stock A is going to do well because a bunch of people are talking about it. That is not the case. You will actually lose more money than you'll make, okay? Please, I've seen it happen so many times, and I just want to save you the trouble and tell you right now, don't do it. It's not worth it, okay? So, do we have any questions? Are there any questions at all? I don't believe so. Awesome. So we'll move to the next one. And our next section is, when should I get into a stock? So we've talked about what stocks are. We've talked about what percentage. So now, when should I get into it? Okay, so you've established that it's a good company. Okay, that's the first thing. You've done your research. When do I get involved in this good company? So rule of thumb, you never, ever, ever want to get into a stock when it's at its highest or even close to its highest. You always want to wait until it comes down. Now, the term buy the dip, people have overstated this so many times recently. Don't just buy the dip, okay? Because what happens is sometimes that dip is actually a trend and you catch the wrong trend. Excuse me. I want to make sure that you guys are not just buying the dip, okay? be sure that you are doing your research. And so my rule of thumb for this, my perfect ideal time is I take the range, either a 52-week range, which is 1 year, or I take a 3-month range. And I see where it's been for the last 3 months. And then I take 50% of wherever that range is. And then that is typically what I would like to buy at that 50% line or below. Now, this may mean that you have to wait, and that's fine. Okay? Sometimes you just have to wait. This is a game of patience sometimes. You just have to be patient. Okay? You've got to wait for that stock to come down. When it comes down, which it will eventually, I promise you, you'll be so much happier, and you will not be mad at yourself for overpaying and then underselling, right? Now, there are a couple of exceptions to this rule. Okay, if you are involved with dividend stocks, you don't necessarily want that to drop below the 50%, because if that happens, typically your dividends will actually go down. You kind of just want to wait for a drop in price and then go ahead and do that. Or stocks with a lot of public traction like Tesla or new IPO stocks. If you can find a IPO stock that is good, and IPO stands for initial public offer, which basically means a new company is about to list themselves, I promise you, you are going to want to get in on that. Okay? You do. You want to get in on that. So please make sure that if you are looking for a stock to get into, that if you can find a good IPO stock, get in that immediately. Trust me, it works out 95% of the time. Or you have a stock with a lot of public traction. Now, there's a difference between public traction and hype. Okay, when I say public traction, I don't mean just a hype stock like GameStop or AMC. I'm talking about a stable company that people are actually buying their products because they love the company. That is what I mean by public traction. Okay. Now, the reason why I say this is, and all of this is important, because this determines whether or not your portfolio increases or declines. And you want to make sure that it's always growing, that it's increasing, because ultimately that's what you want, right? You want to get older to the point where you can retire off of that. So it's important to note that these decisions, you need to make sure that you are making good long-term decisions, okay? You want to make sure that these stocks and these companies that you're getting into are showing that they are consistently growing, that they're becoming more relevant, things of that nature. You don't want to get into a company that's getting into like a merger or closing down or a lot of lawsuits or a recall or bankruptcy. You don't want that. If you do, that's a bad deal. Okay? It's a really bad deal. And right now, all the information is out there, and there's never been a better time to get invested into stocks and companies, okay? It truly is an amazing market to get into. I personally would recommend that highly to anyone and everyone who can. So I don't see any questions at the moment. Cool. I don't see any, but let's move on. And if you guys have questions, we will address those. So lastly, or actually, excuse me, not lastly, but our next one. So we just talked about when should we get into it. Now, when should I sell? Okay. And this can be tricky. This is even tricky for me sometimes, because like I said, I'm a long-term holder. I like to wait on things. So me selling, it takes a lot out of me. Okay. And there's really two conditions that I would warrant it a good idea to sell shares or sell your stocks. That would be the company is losing a large amount of money, like a Blockbuster, and it's about to go under and declare bankruptcy, or whatever the case may be. They may be even going out of business, or it's reached your take profit and it plays into your strategy. Now, again, there's strategies where you should hold a stock for a certain amount of time. and then you sell it. Again, like a take profit, or you say, I'm going to sell, or I'm going to hold on to this stock for a year, see what it does, and at the end of the year, then I'll sell it. But for me personally, I like to do things on the long-term side. So I would also kind of encourage you guys to do that as well, because the longer you hold on to it, the more valuable it tends to be. Okay. You need to take into consideration risk management, because this is a huge deal. If you are wanting to sell your stocks, and even if you're buying stocks, risk management is a big deal, because if you do not know how much you're willing to risk and how much you're willing to lose, you will lose it all. I promise you. Okay? I promise you, you will lose it all. You need to make sure that you are okay with losing X amount of dollars. And for everyone, that's different. Okay? Everyone, that's different. But we need to make sure that we are evaluating our risk and then acting upon that, making sure that we stick to that plan. So, again, I'm not a financial advisor in any way, shape, or form, but, for me, if I see a stock heading down, maybe because it's, the company's going bad, or, of various reasons, right? I listed off a bunch before. Typically I do want to cut my losses. Okay. Unless it's a dividend stock, which if it's a dividend stock, I'm more inclined to hold it because I'm still receiving money from them, as opposed to if I'm not having a dividend stock, I don't get any money out of that. So I'm okay with cutting it. Okay. And again, for me personally, all of my stocks, all my shares, my entire portfolio, I like to get a minimum percentage of 2% per month. Okay. So if you're doing that, you're doing the most banks are giving you on your savings account. But here's the thing. You can't do that unless you are properly risk managing, and then you're also checking and making sure that those companies are still going strong. If you're not doing that, then you're not going to get that 2%, because let's be real, 2% times 12 is 24% a year. Okay. If you're making 24%, that's better than most people are making per year. So again, just be cautious. When you're selling, make sure that it's under a good reason, and not just because, I lost $5 and now I feel sad. No, don't do that. Make sure that you have a good evaluation of the company. When you do your research, you should already have that in hand. Okay. So I don't see any questions for this, and we'll move on to our last section of the day, which is, should I focus on long-term or short-term growth? So again, every person's different. I'm different than the next person. I am the kind of person that likes long-term growth. Okay. I'm focused on the long term. I'm willing to forego a present profit to gain more success in the future. Okay. The way that I do this is a mixture of dividend stocks with growth stocks, which we talked about yesterday, and both of those together, they increase my return on investment. They make my portfolio go up. Everything goes up. It's great. Okay. If you do want to get involved with short-term type investments, you need to be careful. And again, your risk management needs to be on point. Okay. You need to make sure that you know when you're willing to sell and when you're willing to let go of something because it's exceeded your expectations. Okay. Now, something that I will say, and you can write this down, is you can't go broke closing it on profit. Okay. So even if you gain 2 cents, if you close there, yes, it's 2 cents, but you can't go broke doing that. Okay. So just through this whole entire boot camp, what I'm trying to get you to go from is, I don't know anything about stocks. I think that I could gain some kind of advantage from trading in stocks. So what do? You need to make sure that the company is good. You need to make sure that the sector that they're in is relevant. You need to make sure that it fits a trading plan that suits you. And then you need to make sure that you are willing to risk the money, but also when it gets to a certain point, when am I going to cut my losses or when am I going to take my profit? Okay. And then as you do that per company, your portfolio should be diversified enough that you will get some major gains from that. And that's what we want. Okay. That is what we want for you. We want everyone to be successful. We want people to have lots of money, not only for themselves, but also passing that down to their kids. That is the big thing that I focus on, is passing on wealth and things to my kids that can help them do better than I did, right? So with that being said, guys, that is going to conclude our 2-day boot camp. I really appreciate everyone who is online watching this. You guys have been great. If you do have any questions in the future, feel free to message me on Facebook or message our page, and I will respond to you as soon as possible. For those of you who want to learn more or get more involved with us, feel free to go to learningcurveltp.com. Again, the account is free. It's got a bunch of information in there. Feel free to check that out. And then also, if you want to get involved even more, you can join our Facebook community, and that you can find by going to groups under our Facebook page, and there's a couple questions. Answer those, and you'll be good to go, right? So, again, that's really all that I've got for you guys for this. I thank you all so much. This has been, like I said, 3 months in the making, putting this all together, getting all the information together, doing all the marketing stuff for it. So I am really, 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 really happy with how this turned out. Our numbers just kept going up from 25 to 30 to now 35. So really appreciate you guys for hopping on and joining us. But we will have one of these again for sure in the future. We'll probably have an advanced one just because we've already done our intro. So we'll have an advanced Stocks Bootcamp for those of you that want to learn more. And man, I am so happy with how this turned out. Again, if you guys have any questions in the future, feel free to message me or the page or Talon. He is also willing to answer questions, and we will get back to you guys as soon as possible. But it's been a pleasure. It's been an honor, and we will see you guys hopefully in our community, either online or, hey, feel free to join us on calls. We have calls all the time. We have a Mental Adjustment Monday call that will be happening tomorrow, led by Talon. There will be a call on Tuesday for Forex, and then on Friday we have a Financial Friday call, which we are walking through economics right now and really digging deep into that. So please, please, please feel free to join us for any of those. We'd love to see you, love to have interaction, love to answer some questions. So other than that, man, really appreciate everybody being on, and we will see you guys here soon.